Hello and welcome again back to 15 for 15. I'm your host, Jay Nasserman, one of the founding partners of RKW Residential. Today we'll be interviewing Robert Kadoori from CBRE. Our 15 for 15 series is where we interview 15 influential people in real estate for 15 minutes and get their perspective on what's happening in their sectors of real estate during these trying times of COVID-19. A little bit about RKW Residential. We're an award-winning third-party property management firm with over 20,000 units right now. We are in 6 states. We're looking to expand and working on plans to do so aggressively. We deliver expertise in management through technology, marketing, and customer service platforms. And at present, we're primarily Class A and Class AA assets around the country. My guest today is Robert Kadoori from CBRE. Robert is Vice Chairman for CBRE's Debt and Structured Finance Group within the Atlanta, Georgia, Tampa, Florida offices. Mr. Kadoori's specialties include arranging equity investments, joint ventures, Freddie Mac Program Plus financing, Freddie Mac DUS lending, arranging term senior debt, life company balance sheet, arranging mezzanine and preferred equity, structured bridge and construction financing, low-income tax credit financing. Robert works alongside with a fantastic team, including Robert LaChapelle, a dear friend, and obviously close to the family with my former ties as former chairman of CBRE, former vice chairman of CBRE. So we'll jump into it a little bit. And Robert, let me just throw some questions at you. What are you seeing out there right now in the business?
Sure, Jay. Well, what we're seeing is a little bit more clarity day by day. We are coming off a period, I'd say about peak uncertainty was about 2 weeks ago. It was obviously very hard to forecast how the entire market would react. That's the debt market, the equity markets, fundamentals, the government, and so forth. Many of those questions are being answered, even if it's not 100% clear. But the government's reacted emphatically, buying bonds, particularly agency bonds, which has helped boost the market. And just as importantly, the agencies have given some guidance as to how to manage tenants that may be facing some trouble, and have offered terms where they're willing to forbear interest and principal payments for 3 months in exchange for landlords committing to not evicting tenants for a certain period of time. So we're getting some clarity around there, where the fog is lifting a little bit on how tenants are reacting, and specifically what kind of an impact this calamity is going to have on rental collections. So the industry's been waiting with bated breath for the first week in April to see how many tenants are going to be able to pay their rent. And we should have some clarity around that. Figure probably first part of next week.
Good, yeah. And then if they defer the payments, when do they have to pay that back? Does that get tacked onto the end of the loan, or is it in the end of 12 months, or when does someone have to catch up on the loans?
So the program right now is you apply. If you're a landlord, or a borrower, you apply for forbearance on the note, and then your interest and principal is deferred for 3 months to be paid back over the ensuing 12 months. So you spread it out. Over a certain period of time. So it's not hitting too hard. As far as as far as agencies issuing new loans, rather than issue a loan and immediately have it face forbearance, they're requiring borrowers to put up 6 to 12 months of P&I reserve. so that to cover any shortfall, any interim shortfall.
Sure. And I'll jump ahead to another question because I think it segues in at this point.
Sure.
What asset classes do you think are going to be affected by this sort of, the across the sort of A, B, and C? I know you do affordable. I'd be interested to hear your thoughts on, what tax credit deal, the 100-unit typical size deal, on the development tax credit side, and then there's I guess HUD, the government pays the rent, so I guess they're okay there. But what about what are you seeing across the spectrum?
So, I mean, not surprisingly, you're seeing, Class C and B minus a little bit harder. The tenant base tends to live a bit more paycheck to paycheck. And the directive from the agencies, at least, is to work with these tenants and defer some rent down the road. Now, since the agencies came out with the guidelines, the government came out with the CARES package, which restricts landlords from evicting anybody for 120 days. So it does give tenants a little bit of breathing room, but at the same time, it could create the opportunity for moral hazard where those who can't afford to pay the rent are simply choosing not to just because they don't have to. But at the end of the day, the tenants are still going to be on the hook for the rent. It's just gonna have to be collected a little bit later.
Yeah. What are you seeing from the equity side? Equity investors, LPs. What are you hearing from LPs right now?
So the general theme is that I'd say most folks are simply playing defense. And again, it comes back to what are they expecting as far as rent collections and rent delinquencies. So they've been spending a lot of time with their tenant base doing sensitivity analysis of, if rent falls off by X amount, how does it impact their ability to pay debt service and so forth. There are a handful of folks out there that are playing offense. There's no surprise prior to this happening. There was quite a bit of money chasing multifamily. In fact, an unprecedented amount of money chasing multifamily. That money is still there, just waiting for the market to stabilize. I think that there are going to be some opportunistic buys out there, but not too many of them because there's going to be a price disconnect between what buyers are willing to offer and sellers are willing to accept. So there is some motivation to buy. Finding something that makes sense is a different story.
Yeah. What about construction loans? You guys, I know, do across the spectrum.
Sure.
Did you have construction loans in process, or is anything closing right now, or what are the lenders saying? Construction.
It's a mixed bag. We've been pleasantly surprised along those lines. I'd say that most, not all projects where the loan has been committed are still going forward. And as far as deals in progress, it's been a mixed bag. We've had some lenders follow through, and we've had others just move to the sidelines right now.
Yeah, and it's anybody's guess how long that may take.
Yeah, that's correct. Now, I should also point out that the impact on different classes of lenders has been varied as well. The agencies are there to create liquidity in the housing market. They're still in the market, albeit a bit more conservatively. Banks are doing a very good job of working with borrowers as far as potential forbearance, working for them on delaying payments and so forth. And obviously, many of them have put a pause on new lending. Where we're seeing the biggest problems is CMBS, which the market has virtually shut down, and
right.
Debt funds who have been very active in the space are seeing a lot of trouble in their balance sheet, and that world has thinned out substantially.
Well, so they aggregate loans and then they sell them and they securitize them, correct?
Yeah.
And so,
That's the case for CMBS and Freddie Mac, and Fannie also securitizes also but that's on a one-off loan basis.
But I think Fannie and Freddie will have a good chance of securitizing just because of the lower leverage and it's multifamily, et cetera. The CMBS on the commercial side, I mean, not we're focused on resi, but I think that's going to be more problematic.
Yeah,
Don't you?
that's a huge challenge. It already is problematic. CMBS is typically only relevant on the resi side for challenged properties, challenged borrowers.
Right.
But there have been some times in the market where they have been, over the last couple of years, where they have been competitive
Right.
on a straight up deal basis. I mean, we
Right.
actually had a major institution accept a CMBS deal over an agency deal. This was probably around 6-7 months ago. Just because market conditions and
Wait,
market.
and I know that's a different. 6-7 months ago was a different era, and who knows how long it'll take.
Exactly. Exactly.
What were the what were the couple of criteria that pushed it over to the CMBS side?
So it's interesting. The agencies, leaving the COVID-19 crisis aside for a moment, the agency's big challenge over the last few years is managing their production. So the FHA caps the amount of production that the agencies can do. Each agency can do about 80 billion in new loans a year, plus or minus. A demand typically exceeds that number. So what you're finding is that from time to time in the market, if the agencies are running too hot, producing too much, they'll have to back up substantially on pricing in order to slow down their production. At that point, that's where we see the market get upside down, if you will, where CMBS, CMBS in certain instances, and life companies in other instances, are willing to, are more competitive just based on terms, pricing, interest only, and proceeds. Those moments are few and far between, but they are material.
And then, look, just to take a step back on the agencies, there's been a lot of talk over the years of, different political regimes that come in, et cetera, that, maybe the end of Fannie and Freddie, or they may be changing, or they may not be backed by the government. You hear about those things, and then I to those in the know like yourself, just curious as to, are there any, is Fannie and Freddie going anywhere, or are they just going to keep cranking the way they are?
Obviously depends on who's on office and their political bent. It's like many things in finance. It's very easy to point to a good idea when times are good. But Freddie and Fannie being in some sort of government control or government backstop, that's specifically for moments like this, to provide liquidity in housing, and to provide guidance. I mean, think about what the agencies are doing right now. They have, billions, if not trillions of bonds out there. And for any loan where they grant forbearance, they are covering the bondholders as far as debt service. So Freddie and Fannie are paying debt service to bondholders who would otherwise be facing heavy defaults. So I just my opinion, but it's hard to imagine what this crisis would be if we do not have these levers at our disposal.
100% agree. Well, let me take this last couple of minutes here to get us into our speed round. We try and loosen things up, have a little bit of fun,
Sure,
if you will.
Sure.
So I'll just read off some things, and you can say yes, no, or maybe. So what's the over and under that in 180 days things are back to normal in regards to transactions?
We'll say that there'll be some stability, complete normalcy. My opinion, no. I mean, I think we'll be transacting. Folks will be back to playing offense, but the market's not going to be as thick. And I think that has to do more with the arc of the COVID-19 virus than anything.
Agreed. 10-year under 1% for the rest of 2020?
I think high probability.
How long do you think it's going to take before you get on an airplane again?
You asking me or asking my wife?
It's always a team, so I'll ask.
Okay. That's a good question. I'm hoping third, fourth quarter this year.
Okay. How about attending a social event, networking event for real estate?
Not this year, I don't think. I don't think. I think it's, why take chances in this environment?
How about lunch or dinner with clients?
Small crowds, yes.
Do you think the election will be held this year?
I can't imagine it being put off.
And we're totally non-political at this point, but do you think Trump has a chance of winning?
I always had a chance. I mean, we didn't think we had a chance last time, and he did. So
Yeah.
yes, I do think he has a chance. It's interesting that this topic has taken over the news cycle. We'll see how it comes out.
Yep. Robert, listen, we really want to thank you for joining us in another episode of 15 on 15. We hope that everybody out there listening stays safe, and you and your family, Robert. Everybody practices social distancing, washes your hands often, and takes all the necessary safety precautions. And we'll all get through this. If any of the listeners have any questions or would like to follow our RKW 15 for 15 series, please log on to www.rkwresidential.com, and we thank you very much for listening.
Thank you, Jay.